Mr. Saktiandi, Supaat.
Mr. Speaker, sir, the Income Tax Act is one of the most frequently amended statutes in Singapore. Since the 1980s, it has been amended almost every year so as to carry the government's revised fiscal strategy announced in its latest budget statement. This amendment bill is no different. Many of the matters of policy or principle would already have been debated in this House when the government's 2022 budget statement was presented. Hence, I would just like to seek some clarifications on the specific changes proposed in this amendment bill before touching on a couple of issues which I believe should be considered in our periodic review of Singapore's income tax system. Mr. Speaker, in Malay, please. Rang undang-undang pindaan ini tidak bertujuan untuk melaksanakan semua perubahan cukai yang diumumkan oleh Timbalan Perdana Menteri dan Menteri Kewangan pada bajet 2022. Perubahan utama dalam rang undang-undang pindaan ini ialah kenaikan yang diumumkan dalam kadar cukai pendapatan peribadi marginal teratas berkuat kuasa dari tahun taksiran 2024 di mana pendapatan bercukai melebihi RM500,000 sehingga RM1 juta akan dikenakan cukai pada 23% dari 22%. Manakala pendapatan bercukai melebihi RM1 juta akan dikenakan cukai sebanyak 24% dari 22%. Mengikut pengiraan saya, perubahan ini hanya akan menjejaskan individu yang memperoleh purata lebih daripada RM41,000 sebulan. DPM telah mengulas semasa perbahasan pelanjawan bahawa kita tidak boleh mengekalkan sistem cukai dan menyatukan masyarakat kita jika sebahagian besar atau semua beban cukai ditanggung oleh sekumpulan kecil orang di peringkat atasan. Berdasarkan data semasa, boleh saya bertanya, berapa ramai pembayar cukai yang akan terjejas oleh perubahan ini? Berapakah bahagian daripada jumlah cukai pendapatan peribadi yang dikutip yang telah mereka tanggung hari ini? Selanjutnya, apakah andaian utama yang mendasari unjuran hasil cukai tambahan sebanyak 170 juta setiap tahun? Sejak pengumuman kenaikan sedemikian pada Februari 2022, adakah pemerintah atau IRAS mengesan sebarang usaha oleh individu berpendapatan tinggi sedemikian untuk luar pesisir atau offshore pendapatan mereka? Saya bimbang bahawa masa lead time sebelum 2024 akan membolehkan syarikat dan individu menstruktur semula pakej imbuhan mereka dan menghakis hasil tambahan yang kami jangka akan terima. Mr. Speaker, in English, please. Moving on to my second area of focus, of particular interest to me are the amendments to facilitate disclosure of tax information to support data-driven policy making, operations, and integrated service delivery. Just this year, I've spoken in this House and filed a PQ on how we should leverage data and technology to push schemes and services to Singaporeans and Singaporean businesses. The amendment bill broadens the powers of the Comptroller of Income Tax to disclose tax information to any public officer or officer of a statutory board for the performance of any official duties, in some cases without the consent of the person to whom the information relates. We have already seen how useful such tax information can be. As Minister Indrani had shared during this year's Committee of Supply debate, IRAS data across various tax types was used to automatically disburse more than 110,000 payouts worth almost $1 billion under the rental support scheme. However, there is no doubt that the tax information is highly sensitive and confidential. If you are to expect an increase in flow of such information between ministries and statutory boards, will there be any enhanced safeguards to protect the secrecy of the data? The Sing Health episode tells us that the risks of cyber attacks and data breaches cannot be understated. Government data is not immune from this risk. In fact, they are likely to be higher value targets for malicious threats. Finally, if the new disclosure regime is aimed at supporting data-driven policymaking, operations, and integrated service delivery, what is the basis of distinguishing between the 11th schedule information, which may be disclosed without consent, and other disclosures, which will require the express consent of the person to whom the information relates? What percentage of taxpayers have already provided their express consent to the existing disclosure regime, and how does government or IRAS intend to obtain fresh consent for the new expanded disclosure regime? Has there been any public consultations with companies which may be impacted and the extent of data which may be disclosed without consent, and what the data collected will be used for? I believe SMS has given a brief explanation of what data will be used for, but I think my earlier questions are somewhat new in some ways. The third area in my speech is something that relates to the administrative flexibility that characterizes the government. As I understand it, Clause 15 of the Amendment Bill seeks to harmonize the accounting basis on which insurance companies prepare their financial statements. Insurance companies will no longer have to prepare financial statements on one basis for the purpose of regulatory returns to be submitted to the MAS, and another set of financial statements on a different accounting basis for tax computation purposes. Even though this change may cause IRAs to have to deal with insurance companies on a different reporting cycle from other taxpayers, I expect such change to help reduce compliance costs for tax-paying insurance companies. In turn, this could further improve their profitability in the longer term, leading to an increase in the corporate income tax collected. Can this be extended more generally to other types of companies as well? Taken together with the move to facilitate the disclosure and flow of tax information between ministries and statutory boards, there may even be room for companies to file a single return to satisfy all its regulatory, tax and other statutory obligations in future. This may not be a simple switch, but I urge the government to consider such a possibility, as it would boost Singapore's attractiveness as a place for doing business. My fourth area of focus relates to the changes to the appeal process before the Income Tax Board of Review. Under the amendments, the chairperson of the board may appoint a single member instead of a committee of 3 members to hear appeals in a particular case. Will different fees be prescribed for appeals before a one-person panel and before a 3-person panel? Will the factors guiding the chairperson's discretion be set out in regulations? Can the chairperson's decision be appealed? Can I also clarify that the proposed new Section 80(2) will not prevent a duly authorized officer of an appellant company, including in-house counsel, from appearing at the hearing before the board, because Section 80(2) presently states that an appellant can attend in person, but that will be removed under Clause 36 of the Amendment Bill. Finally, allow me to wrap up by touching on one final point that have not been dealt with in this Amendment Bill, but which I feel should be considered as part of the periodic review of the income tax system. As I had again raised in my speech during the budget debate this year, it may be useful to relook the option of assessing personal income tax on a current year pay-as-you-earn basis. In the current economic environment, individuals may experience volatility in income levels or in employment from one year to the next. And what are the hurdles that would prevent us from moving away from a preceding year basis to one that can allow Singaporeans to better manage their cash flow by matching tax payments with contemporaneous income? Mr. Speaker, sir, notwithstanding the clarifications sought, I support the bill. Thank you.